Good morning from Chicago traders. It's 8:02 a.m. on Tuesday, August 19, 2014. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. UK's July CPI came in below expectations year on year, came in at 1.6% versus 1.8% expected. Russia's working on additional retaliatory measures in case Western nations impose new sanctions. That has caused a reaction in Europe overnight. Iraqi forces renew their efforts to retake Tikrit. However, the advance was halted due to heavy resistance from ISIS. Israel and Palestinians, including Hamas, agreed to extend ceasefire by 24 hours to allow talks to continue in Cairo. Had been due to expire last night. Focus is on Fed Chair Yellen's appearance at Jackson Hole this Friday. She's expected to release some remarks. This morning at 7:30 Central, U.S. building permits came in at 1,052 versus 1.052 million versus 1 million. U.S. housing starts came in at 1.093 million. Versus 965,000. This is the highest since November 2013. Housing starts. U.S. CPI came in at 0.1 in line. And the Ukraine says key rebel, this just came out actually a few minutes ago. Ukraine says that a key rebel commander has been detained by the military. Israeli military reports 3 rockets were fired from Gaza that struck a southern city. No casualties. Today, as far as what's on deck, the calendar's clear. The only numbers we had were for 7:30 this morning, and that was done. We do have HP announcing after market, expecting 89 cents. We have a 4-week bill for 50 billion and a 12-month bill for 25 billion at 10:30 Central this morning. Let's take a look at yesterday's action. So yesterday, the hypos worked out really well. Yesterday's expectation was to open out of range, open auction, to test into the 61, and then with the potential of testing down to the 58.50, but the overall expectation is for the market to turn and push to 65.50. Which is this naked point of control. Where does it come from? It comes from back here, the 30th of July. It's the day before we broke lower on the 31st of July to form the lower balance. I'll show you a big picture here in a minute. 6,500 or 65, even 65.50, with the goal yesterday of 71.25, if you remember. And I had said that there's a 2-pronged point of control, or HVN there. The point of control for the entire balance zone is 71.25, with 67.50 being additional point of control. Now, or additional high volume node. Now, yesterday, if we include all of the action that's occurred over the last almost 2 months, month and a half, from the 1st of July for balance, we'll find that the composite point of control moved from 71.25 down to 67.50 because of yesterday's action. We basically created an HVN there, so the point of control has moved down. The next key area up was 71.25, which was taken overnight. In fact, not only was it taken overnight, but if you look at the overnight point of control, magically, it's 71.25. Okay, the point of control overnight. So that was a price that was battled for overnight. Again, we knew that based on the prior action. This does not belong here anymore. And so the markets pushed higher from the open yesterday and continued higher. Let's look at the auction from yesterday's perspective, just to get to keep a grip on the story. I know many of you request this. Quick test of 61.25, just short of the 61 high of range. Very well defended here. It did look weak. It looked like a weak low. So the expectation was for it to push to 58.50 until the market turned and broke the opening swing high at 63.25. And as you see, pretty good follow through on there for 4.25 points, or actually 5 points on that move from the low of 61.25 to 66.25. That was the strongest up move in the morning. And then we noticed that the pullbacks are very shallow. This is a big piece, the fact that it was it opened out of range and it was unable to test into the prior day's range. I call that a boulder in the foundation of what we read as context. And then the market continues to climb higher. So it pushes through that 65.50 and puts in a 66.25. Shortly thereafter, lo and behold, 65.50 is the point of control. Point of control shifts up to 67.25, and it stays there for the rest of the day, and the market just basically balances for the rest of the day there, and that's what caused the shift on the microcomposite from 71.25 down to 67.25, 67.5, and that's how we ended up yesterday. Weak high on the on yesterday's profile. P-shaped profile looked like short covering, and but this weak high portended a further high into the overnight or on today's session, and we did get that in the overnight. So let's look at the overnight session for that part of the story. So there it is from the open, the closing print's the opening print, and then it's just a drift all night long. A nice balanced profile. 71.25 is the point of control. 171,000. So by the end of the session, we expect about 190 to 200. Yesterday, the overnight, once the trader bite was done, it got a little bit more activity, about 20,000 worth, 20,000 contracts worth. So it got up to 192,000, and it may do so today as well. So there's plenty of fuel here for an additional move. The market may rest today because it is the point of control. In the high volume node here, we may see it resting. If I break this balance zone back to where we were before the drop, you can see that we are basically testing out this 71.25 area and pushing, in the overnight session has put through it. The overnight high is 74.50, and then the value high for this microcomposite is 75.25, so just 3 ticks short. I do expect the market to open in a gap here, but I do expect this morning, I don't expect any push. Naturally, if news comes out, that's a different story. I don't expect a strong push either way. I expect, because of the location of where we are, that it's a high volume node and acceptance area. I expect that it would be a balanced day and very, very choppy. So be patient today. It's likely going to require an extra dose of patience. So that's where we are on the overnight. That's my primary hypothesis. I'm not going to be too aggressive with either side. I expect it to test back into yesterday's range, potentially down to the 67.50. This is a really important area. So the overnight low is probably going to be threatened, but overall I expect it to chop around and end the day chopping around. We have a gap to the close below, but not a gap in the range. It's just a tick. So the structure below is not super, but it's okay for now. It's tested out pretty good yesterday and rejected. So we'll see how that plays out. As far as additional scenarios, the additional scenarios, because we're in an open auction or in a gap, there's always an elevated risk of an open test drive, meaning it opens, pushes down, and then somebody drives it through, or an open drive, which means it opens and then they're driving right from the get-go. The most aggressive sign for a trend in the way that I look at the market is an open drive. If somebody's motivated enough to begin buying right from the open, and it means that the market just the opening print is the low or high, depending on the trend. If let's say it's an open drive up, then the opening print is the low of the day, or it's a tick. There's no room for it to move down. And then what you see is the delta is just starts at 0 and it goes straight up with price, and that signals an open drive, and that is the strongest indication of a trend. Next comes open test drive, which means that it just moves in a certain direction, kind of floats along, tests the other side, and then once it's tested, then the driver in the opposite direction comes in. Then comes the open rejection reverse. This is a continuation of the prior trend, and then there's just no interest in that direction, and then the market does not test any particular area, but starts to move aggressively in the opposite area. That's the third level of a trend day. Then we have open auction out of range, which is the market priced in a gap, revalued prices to the point where it left a gap behind, and then usually the market wants to either retest the prior range or walk away from it and leave a gap behind. And then finally, open auction out of range, which is the most common opening type, where the market opens in the prior day's range and then just trades sideways until it has accumulated enough strength to move in one direction or the other. Okay, so those are the opening types. I got an email on that yesterday asking about that. They're described on my website, futurestrader71.com/glossary. All of that stuff is in there. Of course, it's covered in the webinars in there as well. Anyway, that's all I have for you. There is still the headline risk we've always had. We've had for the last couple of weeks. Ukraine, Israel, and Iraq. And we'll see how that goes. ISIS has put out a call for action to attack any U.S. interests anywhere in the world. So who knows what's in store? But that being what it is, everybody's on high alert. So we'll see how that plays out. That's all I have for you. It's a very simple structure that we're in right now. If I show you the daily profiles, you'll see that we've tried to establish a balance zone below, but we've moved into the big balance zone up top and are battling it. It looks like we're working our ways to new highs on the year. There's not much more to it than that. If you look at the monthly profiles, we opened, I can't see where we opened here, but we opened somewhere in here. I think this blue is the beginning of the month, and essentially we have, we moved away on the 31st. This green here was the 31st of July. We finished down here in the 1928 area. We opened, we built balance down here on the profile. You could see the balance occurring here, and then since then we have left that value area behind that we formed for the month of August, and are walking our way up, and have pushed back into balance. And that's why I'm saying the primary hypothesis today is for chop. So we're back into the July balance. There are some structural issues below. We have a single print at 54.50. We have another single print at 60.75 or so. Those are weak areas. The market's likely to pull back to those and balance before it has a strong, steady foundation to work off of. That's how the profile is shaping up on a monthly basis. I'll leave you with that thought, and then I'll catch you tomorrow. Have a good day. Take care.